Good day, everybody. It's Greg Schnell, and I am here with September 7th weekly market review. Thanks for taking the time to join me. As always, lots of charts to go through, and hopefully you enjoyed our little introduction there. What I want to cover off today, well, first of all, to find my blogs, StockCharts.com, go to the articles tab and look for the drop-down menu on the right. You'll find the Canadian Technician. Don't ignore this chart. And Chart Watchers, there's a Chart Watchers article out this weekend, September 7th. I'd encourage you to go watch that. And please hit subscribe at the bottom if you'd like any content by email. Contact information, you can always reach me at gregs@stockcharts.com or on Twitter at SchnellInvestor. Our agenda today, we're going to go through a commodity surge that happened this week, and there's some really interesting factoids behind that one, so I want to spend a little bit of time on that. But the markets did close at the top end of the range, which is quite bullish. I will say there's a couple of mixed signals in there, but in general I want to be positive, and I'll show you why. The industrial commodity surge is a pretty nice one. West Texas finally closed above its 10-week and 40-week moving averages, so that's just got to be bullish. Copper did as well, so lots of nice ideas there. Gold, a low close, another bad week, but perhaps what that is that's actually a confirmation that things might be trying to get better on the other side. So 2 weeks doesn't make a trend, but it's sure starting to develop into one. And then some clues that we want to go higher. I think when we look around the world, there's some ideas that suggest higher is kind of the preferred path. I do want to let you know about a BOWLEY event on Monday night. So you could reach it through this bit.ly link. 21 is the first two digits here, and then HWI 92. So anyway, you've got that, and then you can also, it's on Monday night, so don't forget to sign up. And then my schedule, I'm in San Francisco at Golden Gate University on September the 14th, and I'll be meeting up there for the for a conference. It's all day, and you can go to the website to look for more information. I'm also at the CMT Association meeting with a bunch of great technicians. Katie Stockton will be there, Craig Johnson, Ralph Akampura. So that one should be a roaring barn party because we're actually holding it at Ralph Akampura's barn where he's printed the Dow Jones on the side of the building. So that one should be outstanding. The Toronto Money Show, September 20th and 21st. I'll be speaking at that one, and there's lots of good speakers there. John Kopp will be speaking on behalf of the CSTA. I'd encourage you to hear that presentation as well. And the Canadian Technician Day is setting up for October the 19th, live and online. Tom BOWLEY will be coming through with his strategy for finding top performing stocks. Dwight Galusha will be doing some work on what you can learn by just scanning regularly and the type of information he gleans from looking at different types of scans. And then Barry Powley will be speaking on the overall content of the market. I'll be focused more on the commodity side and what might be shaping up there. So we look forward to that. And we have one more speaker that I can't release yet just because we haven't been able to tie down the date yet, but we're hoping to do that. So as soon as we get to that, hopefully you can join us there. So look forward to that. And that one's live and online. I think it'll be $75 for CSTA members and $35 for anybody who wants to view online. And Tom BOWLEY's content will be US based. Dwight's content was just showing about scanning. Barry Powley will do US and Canada. I'll be doing commodities, obviously US and Canada. So I'd encourage you to dial in. Regardless of what side of the border you live on, there should be some great information there for you. So looking forward to that. And now let's jump into the slideshow. There's lots to go here. So the commodity countdown that we used to have contained all of the charts, and the same charts that I had in the commodities countdown I've now used for the US market review. The one thing that I will say is I keep expanding my chart list. Used to be 190 charts. I think now it's 260 or something. But there's always good charts to kind of keep rolling through, and some weeks they're more important than others. So I try to show you them on the important weeks. This week we're going to start with the commodities, and the reason I want to start there is because I think there's some heat setting up in the kitchen, and we want to see that going. So Let's focus on that area. We notice a little bit of a pullback on the US dollar. Let's not focus on this too much. This chart down here goes from 1993 to 2019. So while this looks like a little blip that you might see on a 10-minute chart, it's also a big blip on a monthly chart. So this is a pretty important little flavor, and we're only 1 week into the month. So let's not add this up that this is the direction of the U.S. dollar. The one thing I will say is commodities are trying to rip higher, and they made a beautiful outside bar this week. So let's go look at that on the weekly chart. And what we see here is this outside bar took out this whole range. And we have to remember that gold is actually rolling over this week. But look at the price action on this bar here. So I got some really nice encouraging signs that some things are starting to improve. And while it's early days, let's look at this PPO. It's only been 2 weeks with a higher histogram. And when it finally turns like that, what we want to see obviously is next week we'd like to see this get above the 11-week moving average, which would be shooting up here between this one and the 20-week is hiding in here, and this is the 40-week. But we want to see this start to improve, and as that starts to turn higher, we should get some thrust over into the commodities segment. And as I mentioned, West Texas crude back above its 10-week moving average for the first time in a while. So that's kind of a big bullish place to start. So here's the DBC Commodity Index Tracking Fund, so something that's actually tradable as opposed to the CRB index I just showed you. And what you see here is, we're trying to break out of this range. And to me, just the trend over the last 3 weeks has been slowly trending higher. And with that higher trend, I think that's a pretty important place to get bullish on the charts. We had this one pullback down here, and it almost looks like, it was stop hunting by algos, because it literally plummeted on the open, tested a little bit lower, scaring everybody, and then reversed and had a beautiful day higher, then jumped up the next day. So that was the Tuesday that we had such a tough start, and then the market rallied out of there. So that was a really bullish note. And for those of you, I am starting a weekly newsletter that I'll be opening subscriptions to right away. But the newsletter I wrote this past week here, I had mentioned, Tuesday's probably a down day, and the rest of the week we should get a good rally out of it. Well, I didn't think I'd be this right, but it was really a big rally that kind of kicked off, and almost every industry group I looked at, almost every global index moved up, the CRB moved higher, all of the commodities, almost every one moved higher except gold and silver. So there were some really nice messages from across the market. I will say that I was hoping for more breadth expansion and higher volume. I mentioned that last week. I didn't see the higher volume. So that's one of the real question marks here is, if it's trepidation as we move higher, that's a little bit more of a problem. We really wanted to see a big surge. So here's natural gas. Look at this beautiful move. And we talked about this last week on the show, but this just continued to surge. That was a really nice push this week. West Texas back above its 10-week moving average, and we haven't seen that since early July. And this brief pullback here, notice this uptrend. We pulled back. We didn't have any downside momentum on breaking the trend off the December lows, and reversed now, and we're back above the 10-week. I think we're going higher, and I know there's a downtrend line that's going to come in here around $57. Let's watch and see what happens at that level. But just the price action as it broke down wasn't a hard breakdown, and now we're at 2-month highs, 2-month closing highs here on West Texas, maybe 6 weeks, whatever. But we're definitely moving higher, and so I think try not to be too bearish here as stuff starts to improve. Here's heating oil back above its 10-week moving average and trying to break this downtrend line. Heating oil is also diesel fuel, which is the fuel that makes truckers roll. And with that diesel fuel, what we want to see here is if truckers are starting to improve, and it was one of the industry groups that I pointed out last week was starting to make some higher moves after trying to break down, and really Schneider and a whole bunch of them gave really lousy results in July, and those charts have been bouncing higher. We're heading into earnings season next month, but perhaps we get a rally all the way through September here, and then we'll see where this market wants to go. but I get the feeling like September is actually going to be an up month for us. So hang on to your hat. I think it's going to be a surprise ride. Gasoline finally turned up. I wasn't happy last week that it hadn't turned up, but this week it finally percolated. It's still a long way from the 10-week moving average, but with natural gas, West Texas crude, and diesel all moving above 10-week moving average, there is some hope for the energy sector that's been so bombed out. Ag sector, here we go with corn, soybean, and wheat. These things have been still drifting lower. It's been very difficult. I drove through wheat country on yesterday afternoon, Friday afternoon, and rolling from Alberta to Saskatoon, Saskatchewan, where I'm recording the video this week. And just stunning scenery with the harvest going on and the crops coming in. Lots of acreage out here for everything from peas, lentils, canola, wheat, barley, corn, just some beautiful crops that we saw as we rolled through. But I think the important thing is we still have no mow in the ag sector, and until we get that, I think it's really hard to put a lot of money to work there. Gold rolled over, as I mentioned, and it's only a $20 pullback. But I think one of the things that's interesting is gold has been ripping since May, and the stock market, we'll go look at it as it's breaking out this week. This week it broke above a previous base that had kind of been building on since the beginning of August. And now we want to go back and test the prior highs. And one of the things that I really want to see is volume come in as we blow through those highs. And if we don't get the volume surge, it's going to be a very suspicious high. Silver got back up to this 1850 level that goes back a long way on the chart. This blue line's been here for a while. And sure enough, we just got up to it and paused there. Now, it's hardly a breakdown yet, but when we get into the bond data, I think what you'll see is we're at least expecting a correction in the bond yields moving up, price pulling back a bit. Here's copper weekly, and again, same thing here. It broke through this red trend line, came down. All the reason in the world to gap below, and it just did not. It literally bounced for 1 or 2 weeks, pulled back, and then took back off, and now it's up above the 10-week. And I want to say that all of the markets around the world that I monitor had a pretty good week. I think India was an exception. But with that sort of breadth coming in globally, it seemed to me like it really wanted to push the market higher. I think there's some optimism setting up around the trade agreement with the US and China. I know that meeting is in October, but if we rally all the way into that meeting, that would be something to be participating in. Okay, sugar and coffee, we continue to see trending lower here. Nothing great going on, more egg pain. Looking in on cocoa and cotton, at least cocoa's been going up for 3 weeks, still well below the trend line and well below the 10-week. Cotton, not so much, continuing to drift lower into the right-hand corner. So, marijuana names actually had a very good week. This was up 7.5% on the ETF for the group, bouncing off of what I would consider some sort of a support level. Here's 1422, 1480, 1337, and we bounced at 1414 last week's close. But there were some nice moves in the industry. Canopy Growth had a big up week. Anyway, I don't have time this week to get into the marijuana names. If you have a marijuana chart list, you should start to go through it because I think there's some names in there that might be setting up for a proper trade. Looking at coal, look at this beautiful bounce that we've had, and then steel also bouncing up. Both of them still below their 10-week, but I mentioned on the Friday market buzz that industrial metals were starting to improve. And here we go with lithium bouncing up nicely and rare earth metals bouncing up nicely. Now here's a lithium chart list. And again, a lot of these stocks are penny stocks, so they're hard to kind of look at. But what we saw from some of the bigger names, this Largo Resources is vanadium. SQM is a really big company in the lithium space, as is Albemarle. And again, these stocks have been beaten down. Their scooter rankings are down at 4. But they're trying to get moving, and I would just keep watching over into this venue. Some other charts, you can see all the ticker symbols over here on the right-hand side. But just go in and watch to see if these starts can start to move. If they can, I think it's something that you probably want to look at. And they've been declining for 2 years, so let's not get too overhyped about it. But we're starting to see things like this industrial metals. This is for 1 week. Look at this beautiful push. And I'm actually in Saskatoon, right out beside all of the potash area this week. So when you see the industrial metals, look at these moves: 12%, 11%, 7%. These were big turns, and some of these aluminum companies starting to run. Here's Alcoa. Anyway, I think there's some reason to go looking there, and especially if the China thing starts to work out, this might be just one of the better opportunities we get to start getting in on some of these trades. And if you go look at Alcoa, this thing was bombed out basically since I think this is when we started to talk trade tariffs, and it's been going down, down, down. Now this week it made a 1 month high. Let's not get too excited, but again, starting to get back above its 10-week moving average. Any sort of turn up here on the PPO would break this big downtrend from last August to September now. So getting in on that would probably be a nice entry. Anyway, I throw those out there because I think there's some opportunity on that side, and that's probably all the time we're going to get to talk about those specific areas. But I really think there's something going on that we can start to watch. Here's the energy sector, looking at the Goldman Sachs Commodity Index, bouncing right off the trend line where we really hoped we'd see it. The PPO is slightly below zero, so in terms of momentum, but any sort of turn up here, you'd be making a higher low compared to the December low. That would be obviously bullish, and you'd probably want to get on that train, and if it was going to start to head north, that would be a nice time to be on it. Looking at the precious metals, again, the hook over the top, this PPO is way out of scale here, up here at over 4%. Even on that big run or in 2016, from late December to August, that one ran up about 30% on gold, but the gold miners moved a lot further. I think the important thing to be aware of here is just how high this is on a scale going back multiple years. And if it rolls over for a little while and gives us an opportunity to go long some of the other stuff, that would be helpful. Here's ag, again, beaten down into the bottom right-hand corner, just nothing going on. This one is the livestock index, and it just looks dismal as well. Now let's jump in on industrial metals, and this is the chart that I think is really kind of exciting. So again, we talked specifically about copper, aluminum, steel, coal, lithium, rare earth metals, all of those. But look at how this chart is building a downward channel. We got below this resistance level, call it 333. Anything that breaks out above this 40-week moving average would be bullish. We've been making higher lows here in July and August compared to June. So this is a really nice setup. And look at, we're starting to build higher lows in momentum as well. So we had some negative divergence where this was dropping and this was rising. All of a sudden, we're starting to see it kick in. If we break through this PPO downtrend that goes back 15 months, this is a very bullish place on the chart. I would say similar to this the 2014, 2015 break in 2016. And that was a beautiful move for a couple of years to ride. So I don't know if we're going to get it yet. I'm just saying it's all set up for this sort of move to happen. So we want to be aware of it and start picking names and places you'd like to enter the market if that was the space you wanted to trade in. For the total return under the Goldman Sachs Commodity Index, we have this downsloping trend line. And again, it's been going on for a year. When these trends change, they're big and beautiful, and we really want to see that breakout. So we've got this momentum downtrend. It hasn't started to turn yet, but the PPO is rising for the last 2 weeks. That doesn't make it a guarantee, but it does definitely suggest that something's starting to change here, and a positive cross on our over our signal line, I think, would be the first step. It's also getting very close to the 10-week moving average. We'd like to get above that. So all of these things are starting to line up that there's something going on, even while the U.S. dollar it was a little weaker this week. But again, the U.S. dollar is still in an uptrend for sure. Here's the energy ETF, and even going back to Friday, look at what a nice candle we had on Friday. So we opened So Thursday opened, shot up high, and closed back in the bottom half of the candle. Not that bullish on a breakout. But Friday came in, we opened slightly lower, tested the lower bar, and closed near the highs, which is at least positive. Now we made a lower low, a lower high, but a higher close. So let's not give it up here yet. We've got some price action we need to work through. But if we can start to break out of this range here, this is very bullish. We're going to get into the West Texas right now, and I'll show you some interesting things going on there too. So here's the crack ETF. What we see on this one is this is the oil refiners. It's starting to turn up here. Momentum has been improving, so we'd have double positive divergence. And what I mean by that is we had a low, we had another low here that was at the same level, but a higher momentum indicator suggesting things were improving. Now we're getting our second higher indicator as we made one stab at a lower low here and start to push higher. This would be bullish. Full stochastic's giving us a buy signal with positive divergence, so we have a higher low on the full stochastic, lower low on the actual price action. So when we get these divergences like this, especially with this nice uptrend in the PPO, lots of things I'd like to see here. Obviously, any sort of a surge back above zero on the momentum indicator would suggest you want to be long the oil refiners if we can start to move into that space. So as bad as things feel out there listening to the news, for some reason the charts are starting to turn, and I just have to say that I want to be on board if they're going to make that move. And again, the commodities can move as fast as these tech stocks, so don't think you have to be all crowded over in the tech space to stay here. Now, the one thing I will use as a word of caution is right now the entire market is crowded into the tech space. And if that was to start to break down, we have a big problem. But again, the big global surge that we're seeing starts to suggest to me that we got some more room to go here. And hopefully that gives the tech stocks the kick they need. And stocks like Roku and Coop have all been unbelievable to watch, the really nice price action. So here we have FRAC and this downtrend on the weekly chart, and you can see we've been basing here for 4 weeks and starting to try and turn up. Full stochastic has given us a cross but not moved back above the 20 yet. Again, we could wobble down here for a while, but I think more importantly it's the big picture of everything else. And this momentum downtrending for 18 months, and now we're making a higher low here. This would be a very bullish place for us to try and get long as we tested support. So here's FRAC on the daily. So we just watched the weekly. Here's the daily. On a relative strength basis, we're actually starting to break the 4-month downtrend of relative strength, which is crazy, but good. And then the second thing we've got going on here is the PPO downtrend that we've seen for 4 months is actually broken and started to move to the upside. And as the price is doing that, it's trying to break through this, I'll call it August resistance level. So a breakthrough here would help. And then the second breakthrough would be back above this red trend line, which is also where the 10-week moving average or 50-day moving average is. So if we could get through that, that would really give us some nice upside. So continue to watch in that space. I think there's some good news. Getting into West Texas crude, you can see we had a really nice candle this week. We made a lower low and a higher high, and we ended up closing near the top of the range, and it was the top of the last, 6 or 7 weeks that we actually closed at. If we just switch this to a line chart, that makes it easier. Let me do that. Sorry about the wiggling around here. Going with the solid line chart, what that does is just shows us the weekly close rather than the intraday data. And when we go over here, you can see that this takes us back through into early July. So we're at 7-week highs on crude and above both moving averages. That's just, where you want to get on board and bullish. Now, we still have a downtrend in play here that we're a little bit worried about. But again, the first thing you have to do is stop going down. So we've stopped that. Now we're trying to make higher highs. We're at 2-month highs. If we got above $60, so we're sitting at 56, if we got above $60, that would put us at new 4-month highs. That's a pretty good level to look at. So we'll keep watching here to see if crude can get any sort of upside momentum, but everything's starting to improve. And the PPO is still trending down slightly here, but a breakout here would be very nice. Now, again, we could just be getting sucked in here and this whole market falls apart based on some really sad data coming out. But I get the feeling that the market is trying to rally here. So I don't want to be very bearish in the face of a rallying market. And this full stochastic is making a much higher low here as it tries to rally. So just keep in mind that there's a lot of things trying to work in our favor chart-wise that are starting to improve. Getting on to West Texas crude on the daily chart, again, just drilling down here into the middle, and it's just a real chop fest. But I think the other thing about this chop fest says that even though the market had lots of opportunity to break down, it really didn't. It held in, and crude held in with it. Look at where this PPO on the daily chart is. It's just about, well, it closed above zero. Now the real question is, can it break this downsloping trend line for the last 4 months? And I think if it does that, that's a very positive place to get on board as your momentum goes positive. So hopefully we start to see that price action improve. Now, looking at West Texas, just yearly, right? We're halfway, 3/4 of the way through the year, or 2/3 here. There's a real important level around $54 that kind of marks a lot of support and resistance around the end of the year. But we're right on target, right? We're basically kind of at this main line for the last few years. Any sort of breakout to the upside here would start to be heartwarming. And I know nobody thinks it's ever coming, but that's why we look at the charts near the lows. So here's the XOP trend line. It doesn't have much to move to get above the 50-day moving average and above this downsloping trend line. So this would be a very bullish sign to see that start to pop. And if we look at crude oil here, we had this big downtrend line. We broke through it on Thursday, failed, pulled back, and on Friday we came down and we closed right at it or above it. So I do not want to be too bearish here with that sort of price action where it tested higher, pulled back just to see if it could catch everybody and move all the way down. And the next day, the first thing we did was test lower and close at the high of the bar. So that's pretty bullish price action. And again, crude breaking above zero here on a momentum indicator would be a very helpful thing. So lots to watch. It doesn't mean it's going to break out, but it's definitely set up for it if it wants to. So let's check this week out. And the price action on some of the stocks were really good. Now here's natural gas. Look at this weekly candle. Kaboom, baby. This looks like the Calgary Tower torch, just running right up to the top here, and a nice almost 9% move on the week. So that was a really nice one. We flagged this last week. Hopefully you caught some of the price action there. Looking at, I don't know that there's a whole bunch of reason to go through all of these. Let's just go down to the nuclear. This is the utility division, and it's rolling over under the 40-week moving average, or 200-day, which suggests to me, if utilities are going to start coming out of favor, that would be a change in trend. And really, this has been trending down for the last 4 or 5 months, and now all of a sudden, we're watching to see if we can go higher on these industrial metals. Maybe perhaps as the utilities start to drip lower, the momentum will move over into the mining side. And again, these have been ugly charts, and we're way down here near the low. I mentioned on this momentum indicator, the MACD, that it had gone so far below anything for the last year and a half. It just felt like a washout low, and it might be a place for us to watch and build a base from. On the next chart is the weekly chart, and below this weekly chart, I've also got Cameco, the big dog in the room. And here we got down to $8. We're now back up at 9 over the last 3 weeks. So that's a pretty big move. That's a 10 or 11% move over the last few weeks. But we're holding right near the lows. And so if Cameco can start to turn up here, that would finally be a nice change in trend. And again, looking at the last 4 or 5 years, we're right near the bottom of this envelope. So if this is going to start to move, that would be great. Cameco closed at the uranium ETF closed at 1091, and the 10-week moving average is at 1095. So it doesn't have much more to get there. But again, it's kind of hard to buy this big downtrend that just seems to always be there on these miners. But one of these days, that thing should reverse if all of these power plants come on stream. So in China and India. Looking over at copper, what we see here is this big downtrend or uptrend line had been broken, but again, on the breaking, we didn't really fall down hard. And look at the price action here as we broke through. So we came down, we made a lower low, then we rallied back up and closed with basically a spinning top, where we closed where we opened, and we had a big price move both ways, so kind of equilibrium. Then we tested higher, but a lower high, made a lower low, lower high, lower low, but a higher close. So that was nice. This week we actually tested lower again, made a lower low, and then closed well above every other close going back for 5 weeks or whatever. Really a bullish push, and that's very important to me to see copper start to turn around. So the histogram on copper is starting to improve on the momentum indicator. We haven't broken any of the trend lines to the upside yet, but this outside bar on copper was extremely bullish, and very happy to see that. That was a 6 cent range on copper this week. So big push, and if we can start to get copper going back in the upward direction, I think you want to be long metals and miners in a big way. Okay, again, commodities are trades, so we'd be getting in near the lows, and we'd want to get out near the highs. Not, it's not an Amazon where it's going to run up for 15 years. So as long as you're into trading commodity-related stuff, this is perfect. Nice higher low on the full stochastic, trying to break out, moved above 20%. Very bullish. And then this downtrend in copper here on momentum. We haven't quite got the cross we're waiting for, but we have 2 weeks of higher lows in the PPO histogram, and we also had better, solid volume, let's just say that, right up around the 30 period moving average on a weekly chart. So that's about a half a year's moving average, and we've been really consistent on copper, so nothing breaking out yet, but this kind of basing coming down here, testing everybody on this 248, and then turning around and doing a full reversal. That's a beautiful trade, and you can put your stop relatively close and see if you can get an upswing on the trend there. So start to look at some of the copper miners, industrial miners, maybe some of the steel companies. All of these should be something interesting. Here's the copper miners ETF, and I've done it as a line chart, but what you see here is momentum starting to turn up. So you can use MACD, PMO, KST, PPO, whatever you want. I'm just showing you some of the different tools on StockCharts here. That's the reason I've got some of these different momentum indicators in here. But I really like this bullish turn at the bottom here and starting to head higher again. This is already up a buck from 1585 mid-July, late August to 17 and change. Beautiful move, a buck and a half. That's 10% already. So these names have been beaten down hard. They could easily move 30, 40, 50% just to get back into some sort of valuation. Now here we go with the steel. Last week I mentioned it had the highest close in 3 weeks, and this week it tested lower but made a higher low, higher high, and a higher close. So all three, that's a really nice setup here. Full stochastic gave us a buy signal, and the PPO is kind of down to one of the lowest levels we've seen in the last 2 or 3 years. So a bounce out of here would be a pretty nice place to start to hunt on the steel stocks. Aluminum, I showed you the Alcoa chart earlier, but I think the bigger thing to notice here is this big downtrend, and if this would start to improve, that would be very helpful. Can't believe how fast the time is flying here, so we're going to keep running at this. I'm going to skip over these two. Let's go to gold weekly, and what I want to show you here on gold was last week I pointed out that we had the first close on the low since early May, and early May was back here where the breakout was, and every week we closed, kind of at least a third of the way up the bar. It was pretty good. And then what we got last week was a close almost right at the low. This week we made a higher high, a lower low, and closed on the lows. This looks like a full reversal to me, and I expect gold to actually move down now. Now, one of the things to remind everybody of is the bonds and gold have been moving in parallel. So if we just added TLT, go get price, put TLT in here, and we could also put the Japanese yen. We could put whatever we want, but they're all moving the same way together. And so if these are about to start reversing, let's go red with this one, and I'm just going to change it from high-low close bars to a solid line, and we've got black, so that'll work. But the point I want to make here is these two have been moving pretty much in tandem for over a year. And if gold's starting to roll over, perhaps that's telling us that we're going to get a top in the bonds and top in bond price, low in bond yields, and a migration back the other way. Now, if that was to start to happen, obviously, I think that would take some of the pressure off the markets, but also help the financials. And if the banks were going to start to move up again, that would be good. Now, one of the concerns we do have to keep an eye on for the next while is that when yields normalize, and what that means is that they resort to the proper order where we see lowest interest rate on the smallest time, so 1 month, 3 month, and then a longer bond like a 30-year has the highest interest rate. So we want to see that bond curve normalize. But as it normalizes, that's usually when the stock market is correcting. So keep that in mind because that would be something to watch. But I think with this, with the price action we're starting to see in gold here, and look at the volume that came in on selling both weeks. So we had the two highest volumes going back a year and a half. Well, actually going back, the last time we had a sell bar that big was back in 2016. So just be aware, I think there's a trend change going on in gold, and that doesn't make it bad. It just means that as that happens, we could watch for more optimistic scenarios on the other side over on the equity market, and some of the other commodities I think are probably setting up nicely. Okay, so here's GDX, the gold miners, and it did the same thing. It put in a doji last week, and then this week fell apart. And again, it's had these kind of pullbacks, but they closed up near the high of the bar after the pullbacks, and that isn't what happened this week. We closed right on the lows with pretty high volume on the selling, and it just seems to me like we're getting to the point where who'd be surprised if the golds took a rest? And you could see 2016, same sort of thing. And by the end of August, it was breaking down. Here we are, the end of August, breaking down. I don't know if there's any similarity there. But obviously, if gold was starting to decline and came all the way back down, even 10, 15, 20%, whatever, give a pullback on the gold miners, and that might be a much better re-entry, and we'd look for that at a different time. Right now we're looking at the top of this, not the bottom. Okay, gold miners starting to underperform gold again here. We've broken this uptrend line. Now I've drawn one here that we broke, and now drawn another one that we broke. But it looks like the momentum's about to go below zero here, so that is probably a bit of a clue. And you can see GDX has broken the trend line on the close with the Friday close action. So definitely worth watching if you're long gold. I'm not sure I want to short it. I would just go to try and find something more optimistic like the copper trade or the steel trade that could be setting up for us, or the oils. Here's silver. Who could call that chart parabolic? And this is the type of breakdown you get on a parabolic chart. All of a sudden it just starts gapping lower, and big down days, huge volatility or high true range. So when we talk about true range, let's say this bar in here, we gapped up, we didn't move very far during the day, but we held in there. The next day we gapped up and we held in there. Small volatility ranges. Look at the size of the trading range of the last 2 or 3 days. So that's typically how a parabolic move ends, and we just want to watch to see that. And you can go to a chart like Tilray, TLRY, or something like maybe even Beyond Meat has started to do that thing, that parabolic back check. Here's lumber, and lumber actually had a tough week, down 4.5%, but you could see the PPO is trying to hang in there. And again, this chart goes all the way back to 2007. But in general, lumber as a commodity just kind of trades choppy, and that's something to be aware of. But look at what happened on the wood ETF here. It's still building inside this pennant, and it did make a higher close this week. And if this starts to break out to the upside, I think that could be quite bullish. So here it is, the actual good look at wood. There's a lot of O's in that, but here we have the downsloping support level, downsloping highs, and again, this is what we call a wedge pattern, and when this starts to transpire, it breaks out to the upside. You can see we're getting a full stochastic buy signal here, and if our PPO momentum can break above its signal line, and this histogram shows the distance between the line and the signal line, getting to zero. If this goes positive here, this is a pretty nice inflection point that goes back over a year. A nice year-long trend line break on momentum is something that I would look forward to, and would expect that that would propel this to break out to the upside. I like the positive divergence on the chart, and we're above the 10-week moving average. So finally, something to talk about in the commodity space. Very bullish. I briefly just want to show you a couple of the autos because I think there's something important going on there. They're all starting to percolate, and I mentioned this a little bit ago. Looks like Ford trying to turn up above zero. It's back above its 40-week moving average. Still got a little bit of resistance, but the full stochastic is starting to give us a buy signal. FCAW, Fiat Chrysler, look at this nice little poke up this week above both moving averages, and it wouldn't take much to get above this 1437. PPO right near zero. This is a nice place to expect something good to happen. The SCTR ranking is at the highest level it's been at for a year, so something's starting to percolate on these car charts. And here's GM, big week last week, up 6%, and there's a PPO trend line here trying to break, and notice how it stayed positive. The PPO on a weekly chart stayed positive all through the swings we've had so far this year. Now the chart is ground sideways, but you can just see it wouldn't take much to get us above 40 bucks. And getting through there, there's 1 or 2 weeks in here that were higher than that, but I think the highest close is just barely above 40. So anyway, watch this week. If GM starts to do that, we'd be at new 52-week closing highs, and then we'd have to see if we can get through the intra-week highs as well. Usually a full stochastic bounce around 50 is very bullish, and we're there right now. So lots to like on that chart. Companies like Magna, this also trades in the US, MG is the ticker symbol, but this chart's breaking out to new 3 or 4 month highs, starting to build higher lows, full stochastic up around 80, that's bullish, trying to break this year-long downtrend and momentum right at the zero level here. So starting to do that, that's very positive, and I'm surprised. But if the car companies are going to start to break out, that would be something worth watching for. All good there. Let's go to Europe. And the reason I want to show you these European charts, look at the price action here. We were down below the 200 or the 40-week moving average just 3 weeks ago. And all of a sudden we rallied up, and we had 2 closes kind of at the low. Last week we made a lower low and a higher high, nice outside bar reversal. Off we went. This week we didn't even test the bottom half of this bar. We pulled down slightly and then shot up and closed above the 10-week. Very bullish on Germany, and as you can see here, we're trying to get above this downsloping trend line that's been going on for a while. Look at where the PPO is trying to turn up, right above zero. So definitely trying to give us some positive spark here, and I think that's worth watching. If Germany can start to go, and the next chart I want to show you is France, and it's actually trying to break out to new multi-year highs here. And you can see Macron was elected roughly 2.5 years ago, and the chart has done nothing since. So here we go, trying to get through that, and all of a sudden a breakout through 5,600, and we'd have our highest close if we can close up there next week. So watch these European charts, the PPO trying to turn up well above zero. Lots of positive shaping there going on. The Dutch market, Amsterdam. So you can see this is pushing up higher. It's above both moving averages now and trying to take out this, call it 570 resistance. There's briefly a push up to the 580 level, and that was a hard rollover off of that. But, we made a high, came back down, tested, the lows held. This looks to me like it wants to go higher. Sweden, and I just like to keep track of this market because it has a separate currency, the Swedish krona, and you can see downsloping momentum, but still trying to turn up above zero here, so that would be bullish. It's back above most moving averages. I will say if this whole market is going to break down and take all of these charts back, roll them over, it's definitely twisting and turning with the algos here to try and get any sort of direction defined. And I get the feeling things want to move up. Look at this Shanghai chart. Big push this week, back above it didn't even go below the 40-week this week, so considering all the trade news, it's back above its 10-week moving average. It's trying to break this major horizontal resistance level. Look at the PPO basing right at zero. I pointed this out for the last month. It's trying to base here and starts to turn higher, extremely bullish. And I would go look at some of those China stocks. So lots of things are starting to shape up. Here's Hong Kong. Even with all of the protests going on there, look at this big bar this week. Made new 5-week highs. Very bullish. Momentum is below zero, so that's not good. We're below both moving averages, but again, we seem to have just stopped the downtrend at support, 25,000. And can we break out to the upside? Very nice look on this chart. The Nikkei, one of my big areas to watch in the market, and had an outside week last week, and then this week powered up and moved right up above the 10-week or above the 40-week moving average and just below the 10-week. So I think there's some price action here that we want to see. The full stochastic has turned up well above 20. That's usually pretty bullish. And in general, this market's gone nowhere for 2 years. But the real question is if this was going to start to be the breakout with the PPO turning higher just below zero, it's all a bullish setup. So the market tried hard to break down here and held and held and held. So, when it's happening globally, that's pretty important. Now, the one thing I want to show you is how strong these commodity countries are: Australia, Canada, Russia, and Brazil. So here's Australia, made its high in late July. That was better. That was really bullish. Had one down week, kind of like the U.S. market, but you can see it clearly broke above this resistance level. Broke above in July and now made a nice base here down around the 20-week moving average, so the center of the weekly charts on the Bollinger Bands, and pushing back higher again. This is bullish, and look at this nice high PPO, well up around the 2% level. That's very strong. Let's go to Canada on the weekly, and Canada is trying to position to break out to new all-time highs here. Been stuck at this level, kind of like the New York Composite, stuck here since roughly 2018. Now, Canada did briefly make a high in April that was up a little bit, tested it in July. So it just keeps testing it. It's holding up. We have a downsloping here momentum. So we broke this big momentum uptrend. That was a concern to me. And look at the price action. We just held in here. If energy is going to start to rock, this would be bullish. And the other thing is that this was a bear market signal, rallied up, gave us a bull market signal, and is holding above the 40. That would continue to say be bullish here. So even back in 2016, we rallied up and we got up here and we came back down. We got to the 40 level, which was a pullback, right? But the market just ground sideways. It really didn't want to go any lower. And then it popped to the upside meaningfully. And that was a great place to get on board. Well, this week we're just starting to do that, make the move above the 10-week moving average, and it looks like it wants to go higher. So I think it's an important place to be aware of the trend change on all of these commodity countries. Here's Brazil. Really nice bounce off this uptrend line. Tested the 40-week moving average, tested the 20-week moving average, and is moving up, up, and away again. Things are starting to improve. So that one looks good. Check out Russia. This chart just flew this week. It was up 3.5% on their overall index. And again, crude oil was okay and trying to get going, but crude moving back above 10-week, and all of a sudden this chart, you can see these tops sitting here from 2017 and 18. We briefly pushed up to new highs in July, come back, pull back basically to the support level in here, and take back off to the upside. I just got to call it bullish for all these commodity countries. And that's one of the things I really want to emphasize is that it looks like commodities are set up to rock here. So here's the big downtrend in Australia versus the U.S. market going back to 2010. Here was when the uptrend changed in 2000. And if we go get the CRB or West Texas crude or any of those, but let's just go, sorry, went to the wrong place. Let's go get the price action here of this CRB and just put that on this chart. We're going to go with it in red. So watching this price action work, what we want to see here, it might be easier if I set that scale higher or actually put it behind the price so that it's got room to oscillate. But what we see here is this big move that started in 2000 and 2001 in the Australian market kind of hinted that commodities were done falling. And in 2001, they actually made their lows and then went from the lows all the way up and had a beautiful run into the 2008 top. Now, it pulled back hard in there while this was topping structure and then made a lower high and rolled down. Well, now we have this Australia bottoming relative to the S&P 500, and the charts are testing the lows. I get the feeling it's something like this in here, this 0102 period, where we've come off the highs, we come down and we test the lows, and then from there we start to rally. So with all of the commodity countries, Russia, Brazil, China, not China, Russia, Brazil, Canada, and Australia starting to make this move, this correlation is starting to improve for me. And maybe it's early days, but it's definitely something to put on the radar with the Australia stock market starting to outperform. And again, if we get any sort of China deal, I would expect the push in industrial metals to be wonderful and something you want to take advantage of. So let's just keep all of those sitting there. Now, I will point out one thing that didn't kind of go as well as planned this week, and that was the India stock market. And what we see here is it's jogging sideways. It was down slightly on the week. It was down 1%. RSI is trying to hold around this 40 level that I mentioned before. It's trying to hold this uptrend line, and you can see we've jogged here for 6 weeks. If this starts to break down, I think that would be more concerning. I would expect this to start to follow the rest of the world up, and it hasn't done that yet. So that's one question I have. And then we have our good friends in the UK, and what I'm watching for on this particular chart, we'll just flip it over here, is, they had an okay week, but it wasn't like the rest of Europe that moved above their 10-week moving average. But we did get a full stochastic buy signal, so that's nice, and the PPO is trying to turn up well above zero. So continuing all the harsh talk going on around Brexit, this chart still looks okay to me. And again, we want to watch it. It's not as dreamy as the other charts where France is trying to break out to new highs. Germany's definitely trying to break it through that downtrend it's got going on. Those are pretty important messages anyway, so we have a couple of other markets to watch. Now, I took so long on commodities, we're literally going to have to fly through the breadth indicators. But the point I want to make here is the NASDAQ advanced decline line. It is still putting in a higher high here, so that's nice. It rallied up slightly. I would call it okay. The stock market is moving up here during these periods, and we're up around that area. So this all looks good. If you read Carl Swendlin's article this weekend, it's on the articles tab on StockCharts. He's suggesting that we're a little bit short-term overbought. I think that's something to be aware of. But we didn't get enough net new highs here to push us up into positive territory, but it's still early days. On the New York Composite, what we see here is this did make all-time highs, and that was happening last week. So this continues to push up. And look at how strong we are here. I think we're in the early part of an advance. Now, the real question is, do we have enough breadth to stay up at this level? And again, we're testing prior highs. So as the market moves towards the September timeframe, one of the things I want through the September timeframe, one of the things I want to watch and make sure is we have lots of breadth. We are setting up. I don't have this chart prepared, but it wouldn't take long. So let's go dollar SPX. Okay, we just want to take a weekly chart, and we want to go look at. I guess we don't have to go back that far. I want to go back 16 years. And what I want to show you is the way the topping structure started in 2007. And so on this chart, We actually had a July high. We pulled back into an August low and we rallied up and we topped out in early October. And again, it started to give us the feeling that everything was improving. Full stochastic shot back up all the way to the top of the range. But in the meantime, we had some declining momentum heading into that top. And as it hit, that would be a problem. So when we look over here, we have somewhat declining momentum, and now what we'd worry about is we don't get enough momentum to break out through the top. And again, July, October timeframe. So we're going to watch this October period pretty closely and make sure everything follows along. It's the breadth that I really wanted more volume this week to kind of give us some real enthusiasm, but I'm very encouraged by the global setup. And the advanced decline line for the S&P 500 broke out to new highs this week. This is the percent. So you take the percentage of stocks making new highs. It broke out. So this is very bullish. It's at the highest range in 3 or 4 months here. This doesn't feel like a top yet. Let's just watch and see how, if it starts to diminish here in terms of enthusiasm, then that would be something to watch for. But to me, it still looks like it wants to trend higher. And again, as we head to October, we'll give that one more check. The Canadian market, just abysmal, actually. The bump so far is pretty small. And where did we get to on price action? Right up against resistance. So while we had an okay week, on the daily, we actually had a net change on the advanced decline line of 165 down. So as soon as we got up to this prior high, all of a sudden we stalled again, and this this area chart, mountain chart, whatever you'd like to call it, didn't get very much enthusiasm yet. So I really want to see it pick up some serious steam and get rolling if we're going to break out of this and push to all new highs on the Canadian market. That concerns me because, again, Canada's been a weaker market and kind of told us since 2018 that nothing's going on. All of the stock markets globally have done that. So we really want to see this Canadian market start to kick up and give us a clue that there's some actual strength to the rally. And I think if commodities globally are going to do that, then the picture sets up much better. Looking at the McClellan oscillator really quick, we got below this 400 level, and I mark on the next chart that it's a little bit dangerous below 400. Well, it's turned back above it, so I'm bullish. And we see this sentiment can stay up here for months, and that gives you, even if it's a strugglingly climbing market, a climbing market. And the McClellan oscillator itself is above zero, and you can just see that it can spend its time up here pretty good. And as long as that's happening, then we're going to be able to enjoy some bull market thrust. The breadth indicators from the bullish percent index and percentage of stocks above the 200-day moving average did not improve enough. So I'm not going to cover them off just to say that there's no news there. But here's the monthly performance for the S&P 500. All of a sudden, from August 7th to September 6th here, we're up 3.2%. So that is definitely more bullish. And the year-to-date performance, again, 18.82%. So that's kind of what everybody's got to beat right now. The one thing that I keep bringing up is the volume, and what we see here is the volume was relatively light. We had a nice buy day on Thursday, and then Friday, nobody came in to keep it going, which is a little bit upsetting. And so we got down to one of the lower days, well below average. And so just have to keep watching here. But I was encouraged that the buy day had some serious volume to it, but would have liked to have seen some follow-on. Now, this is the NASDAQ composite, and what we see here is the PPO is moving back above zero. That's just bullish. That's what we want, and that's what we saw here in early 2019. Got above zero and stayed up there for 3 or 4 months. So let's keep an eye on this and see if we can do that, or do we just basically get up here and run out of buyers very quickly. Lots to think about, lots to focus on. So again, I'm in San Francisco at the end of next week on Saturday. So if you could join me there, I'd really appreciate you coming out to see me. We also have a couple of things going on over the next month, so go and check the calendar, see if any of those line up for you. Tom Bowley's event on Monday night, that's worth checking out. And as well, let's make sure that we get some volume, but try and stay focused on the commodities to see if they're going to give us the rally clues that we want to see. I want to see this NASDAQ start to outperform and some of the other sectors start to break out. So with that, thanks for joining me. Have a great week, good trading, and stay positive. Keep the harvest going. Thanks, everybody. Bye-bye.